Let's do some Top That Trade. Joining us now, Phil Flynn, a Fox Business Network News contributor, and Alan Knuckman, the chief market strategist at bullseyeoption.com, here for our trader game. Round number one, fear factor. The VIX, the gauge of uncertainty, spiked this week. What is that telling you about the stock market?
But it's interesting here that the VIX is not making new highs, even though the stock market made new lows over the last year. Let's remember the VIX was at 90 in 2008. And it's about 15% off its January highs. So the markets aren't as scared as we may seem personally.
Yeah, it's too bad the VIX measures fear and it doesn't measure depression because, a lot of the clients that I've talked to, are looking at their 401k and they're not very happy. So there's a difference between fear and sadness in the marketplace. And listen, they have reasons to be upset, right? I mean, we're seeing signs that inflation continues to be strong. We're seeing that economic growth in this country is still negative. So there are things to worry about, right? But you got to keep your eye on the prize, the big picture in investing. And the big picture is you don't want to bet against America. You
right.
Usually want to buy when there's blood on the streets. And we've seen a lot of that bloodletting over the past couple of weeks. We believe that there's going to be more volatility in stocks, but we still think that stocks over the long run is the best investment. So, don't look at your 401k, keep contributing into it, and look at the bright side. If it continues to go down, it's like you're scaled down buying. And if you have a few years to retirement, it's going to look a lot better when it comes back up.
Round number two, lemonade squeeze. Markets are giving investors lemons. What is your plan to make some lemonade?
You want to make lemonade? I mean, you should look at the price of orange juice and lemons because, we've seen those prices really spike up here a little bit because of some weather issues. Maybe we should be looking at Tropicana. The bond market, I mean, listen, there's a lot of people dumping money into bond yields and they haven't done very, very well, right? People are running for safety. Sometimes when you look for safety, you give up gains in the marketplace. So you have to be very careful about getting too cautious right now. Now, obviously, everybody's different, right? If you're in a situation where you have a short-term horizon, maybe look to buy bonds, to get some type of guaranteed return. But if you're a younger investor, forget about it. This is your time to make hay, make lemons, make lemonade, whatever. Look for those stocks you couldn't afford a few weeks ago. You might be able to afford them next week.
All right, let's remember from 2010, prior to 2010, forever, bond yields had always been above 4% and above 5%. So the free money may be gone. That's all it was. It was free money. But there's some good news. You're starting to get payoff in your bank accounts. And right now, the inflation index bonds are paying off 9.62%. That's crazy yield, something we haven't seen in forever. And it's indexed inflation. And inflation actually is ticking down or not going higher month to month.
Round number three, consumer conglomerate. Pick a play. Will it be Johnson & Johnson, Procter & Gamble, or Unilever?
These giant conglomerate stocks are going to weather any storm, in my opinion. So, they've come back down. The J&J, the PE ratio is about 16. What's interesting here is there's been a corporate change, and they're going to change the name of the company that oversees everybody to Kenvue. So I don't know why you would take a brand like J&J and change it. But anyways, that's their business. The stock's been between 160 and 180. It's about 165 right now. So it's very close to support. I also like P&G. It's right near the 120 midpoint of the action for the last 5 years. So I think there's some safety in those super stocks.
Yeah, I think they were going to go with PB&J, but that was already taken as well. So, no, I like Procter & Gamble here, right? There's a possibility we're going into a recession, maybe even more inflation. And this stock has proven in past recessions to be extremely resilient.
Here's your bonus round question for today. Earlier this month, movie studios offered tickets for just $3. So how much did they earn at the box office? Was it $24 million, $5 million, or $10 million?
$10 million.
I'm going to go with the higher number because I think that brought people back into the theaters. It's probably the middle number, but just because I like movies, I'm going with 24. I don't want to see theaters go away. I like getting away once in a while.
Phil is our winner this week. It was absolutely $24 million. Theaters should sell tickets at $3 all the time. Great job, guys. Business First AM continues right after this. Go to businessfirstam.com for where to see our show on TV.